So a disclaimer first, given it was thriving in the digital world, I decided to discard my paper notes and convert it into phone, staying true to the agenda for the day. So Shankar Sundarrajan here. I'm the co-banking and payments leader in IBM for India South Asia market. And just as a little trivia and a little secret, I'm a failed entrepreneur before IBM, before my IBM stint. I couldn't successfully raise my second round. First round के पैसे raise किए, उड़ा दिए, उसके बाद second round मिला नहीं, तो company बंद करनी पड़ी. And that's how I came back to corporate. And that's also one of the themes that we will discuss with all my friends here who seem to be doing very well, touch wood, in their respective value propositions that they are taking to the market. So it's going to be, I know we are in between banks, and I truly believe that we've been given the right slot, given that we are young, we are energetic. Fintechs are supposed to be young, fintechs are supposed to be energetic. Don't go after the grays on my head and the bald head. I'm young at heart. So predominantly, post-lunch is the most difficult session. And I don't know, the onus is on all of us to keep it going and to ensure that we don't hear any snores. So please don't snore. And if you're sleeping also, please be quietly sleeping. That was just pure banter. So predominantly, we're going to cover a lot of things in fintech today. There's been a lot of buzz about what is the funding weather like, are fintechs struggling to raise money, what does the profitability roadmap look like, and we have some real stories coming in, which I personally believe is going to be very interesting. And I personally want to do a little introduction, though I believe that she did an introduction, but I just wanted to do my takeaway of how the panel is set up, right? It's a very eclectic mix. We have Abhishant, who is in between banks and fintech, who partners, I don't know what, Abhishant does many things. So, and then we have Siddharth, who is a fintech within a bank. So he's the Freecharge CEO. So he's the fintech within a bank. And we have can I call you a pure fintech?
Hello. You can call me whatever is left in the fintech.
So we have Ketan here, who runs Mswipe, and obviously he's in the toughest business of making money out of payments. And how do you make? And on my left, we have Arpit, who's also a very dear friend. We go back a long way. And he sits across all the fintechs. Can I say that, Arpit? He's an enterprise offering. You're a fintech with an enterprise aspiration. And then we have Avinash, sorry. We have Avinash here. If I interpreted your value proposition right, he's trying to make money sitting in between corporates and fintech with expense management, etc. If I've done justice.
Spend management, yeah. Spend management.
So spend management. So everybody, it's a very, very eclectic mix that we have. And the challenge that I had, and when we were breaking heads with the ET team on how do we structure the session, right? What do we ask? Are there any common patterns emerging? How do we go about conducting this session? So pardon me if you see any bloopers, but we'll try our best to keep it going. So we'll start first with the most important question, and there's a lot of PR around it. Oh, fintech funding is over, it's dried up, nothing, there's no money available in the market. Founders are finding it tough. And my friend here on my left he's fresh off the oven. He's raised some good amount of money on September 26th. So we'll start with you, Arpit, in terms of what is your take on the fintech funding winter that everybody has been talking about?
Am I audible?
Yeah.
So, of course, it is different from it was for the last 1 year. But when we first raised funding, 2016-17, Series A's used to be 2 million, 3 million. Now they were 30 million. So, I think it's back to where it was in 2016-17. It's more real. It's more value driven. I think there is still money out there. So it's not that money does not exist. I think we have more funds just in sheer size in India than they were in 2016-17. I think it was far harder to raise any amount of funding in 2016-17 than it is now. Because you have people like Abhishant who are building like amazing ecosystems. So many people who have exited in the last 2-3 years have become angel investors. So there's definitely a lot more funds, a lot more angel investors. But yeah, you're not going to raise a 30 million Series A round maybe now.
Avinash, your take?
So I think two pieces here, right? One, why are we looking only at equity funding, right? There are opportunities that are there to raise debt. There are opportunities there to go ahead and bring efficiency in your businesses. Maybe get your customers to pay a little earlier, right? There are ways in which we can optimize. We help companies do that through our platforms. The second thing I think is value is back in fashion. Profits are back in fashion. And as a profitable company, I think that's welcome. I think too much of hoopla and hype had got created. It was a bubble that was bound to burst. And I'm in some ways, I wouldn't use the word glad, but I think it's not so bad that it has happened this way, where it has happened organically, rather than some seismic event causing it, and things coming down in a crash. Like what happened in 2007. This is a better way where it's naturally gotten too hot and it's cooling down in a calibrated manner. So I don't think it's bad. I think it's just bringing realism back to founders and CEOs as to how they build their businesses.
Perfect. Ketan? We'll go to Abhishant at the end because he'll have the most different take.
Yeah. So, just to add to what Avinash said, and congratulations on being profitable. Profitable companies will always get money, right? And there is a lot of money available. There is dry powder available with a lot of investors. If companies and founders forget the two bad words, which is down round and flat round, then I think they can get money if there is a story behind the company.
Perfect. Siddharth?
It works.
It works.
So the way I look at it is there are two parts to it. Obviously, the metrics around profitability, the sensitivity around it has come back and will come back very clearly. Some of us in this ecosystem are profitable. Freecharge is a profitable company. The ecosystem is not, and I think the ecosystem will take some time. But there is a funding slowdown. We call it winter. I am from North, so yes, it is winter. Just now it's cold. There is a slowdown. As everybody said, there is money available. If you have a business model which can prove sustainability, you will get money. But what this is going to do, this funding winter as we like to call it, is reshape the thinking from a long-term perspective that you need to necessarily balance growth with sustainability. And that is going to be an important matrix when you go and raise money. That's the question that is going to come front and center, even going forward. That's my take on it.
Perfect.
Thanks. I will possibly start with the fact कि जो पिछले 2 सालों में हो रहा था from a funding point of view, which is 2020, 21, 22 types, वो शायद इस तरीके से समराइज करा जा सकता है कि अंजाम बर्बादे गुलिस्ता करने को सिर्फ एक ही उल्लू काफ़ी था. यहाँ हर शाख पे उल्लू बैठा है, अंजाम गुलिस्ता क्या होगा. सो वो सिचुएशन थी उन 2 सालों की जिसमें हर शाख पे बैठा वीसी जो है वो इस ताक में था कि भाई साहब, मतलब आप जो है वो खिचड़ी, चावल, कढ़ाई, ये अलग अलग बर्तन जो है ला करके सामने रख दो तो वो जिस वीसी के हाथ में जो लगे वो ले जाता था. किसी के हाथ में कढ़ाई ले गई, वो कढ़ाई ले गया. किसी के हाथ में चावल है, वो चावल ले गया. पकी हुई खिचड़ी नहीं चाहिए. सो अब अगर पकी हुई खिचड़ी नहीं चाहिए तो फिर समस्या तो होगी ही होगी. सो एसेंशियली व्हाट वी एक्सपीरियंस्ड ड्यूरिंग दैट पीरियड वाज एन इर्रेशनल एक्सुबरेंस which essentially costed everyone in that sense. Now, if you look at it purely from a number sense point of view, then in fact, interestingly, specifically in fintech as a space, the number of startups which got funded this year is more than what got funded last year. So we did a study of startups till October, and startups which got funded till October is around 17% more than the startups which got funded till October 2021. However, there are interesting 2 different points. One is just that the total value of funding had gone down by around 26%. Is the total value which has gone down. At the same point of time, number of venture investors investing into single startup has increased. Earlier, the norm was around 3 to 4 investors. Now we found an average of 5 and a situation wherein there were 13 investors in 2-3 startups. So the risk appetite of a VC in terms of capital provide has gone down significantly. The capital allocation has gone deep into multiple value chains, and overall, the number of investments which are happening are quite interesting as such. I'll give you 2 examples, maybe to give you an idea that how much we are in winter or we are not in winter. Example of a startup, 3 founders, great experience, on an average experience of around 20 years, starting something on credit on UPI front. Startup is at paper stage, just has got a presentation deck. They have raised around 6.5-7 million. So is that kind of a thing happening? Yes, that is happening. But then market is also putting conviction a lot on what they have built in past, what they stand for, and what they can do. So is market willing to back such startups even today? The answer is yes. At the same point of time, there is another startup which is based in Gurgaon. In this case, the startup has around 900K MRR, approximately 11 million kind of ARR, but is not profitable, has not been able to raise his money for last 9 months. So you can understand where the market is gone and how market is evolving with these 2 examples. Thank you.
Perfect. Thank you. I think it's a very valid perspective. Profitability is paramount. The focus on unit economics is something that is that had to be there. It's coming back into it's becoming the norm. And what you said, the ideas of what they have done and the big ideas, betting on the future, still continues. So I'll move to the second question of mine, right? What is, and it's the most abused question everywhere, it gets asked, so on and so forth. Fintech versus bank, bank versus fintech, collaborate, compete, right? I'll start with you in terms of what's your view, coexistence, collaboration, competition, what's your take?
Yeah. So I think I'll respond to this in 2 ways. One, the Indian context, and then the global context, right? So in the Indian context, it's largely also driven by how the regulator sees it, right? And if you look at the regulator's view, the unsaid view, it has been that, they have always encouraged collaboration between banks, between fintechs, between various entities. We took a cue way back in 2011 and we decided to basically work with partner banks. We worked with a whole host of banks, whether it's Yes Bank, IndusInd, now we work with IDFC First, we work with NSDL, we've started to partner with other banks as well. And we've seen that model actually work well. It forces you to be more disciplined. It forces you to take a more conservative approach to your business. And at that time, it may be a little frustrating for a fintech because you're shackled, but in the medium to long term, it serves you well. So I think from an Indian perspective, it's a fairly no-brainer that collaborate is how we view it. It's worked well for us, and that's my advice to any fintech entrepreneur. Globally, it depends very much on the market. It depends on that market, how mature the banking ecosystem is to partner with you, how deeply entrenched those banks are they willing to collaborate, and do you even need to collaborate, right? That also is dictated by a regulator. For example, if the regulator is allowing you to directly hook onto a payments network without actually having a need to have a bank, then maybe that's a viable option. But in the Indian context, I think banks and banks have also realized over time that they can't do everything. Customer-facing tech is a tough problem to solve, and that's a problem that's potentially best left to fintechs. A lot of banks have realized that, and they work very effectively. Banks, as trust custodians, as keepers of people's money, are great institutions, and I think that's a very tough job that they have, and they've been doing it very effectively.
My friend, enterprise selling.
I think this is one of the questions we have been debating since 2016, right?
Yep.
That one question which has always been there in every single panel that we have been in, and I think it was a very open question till very recently. I think there's always a debate, but now I think the Indian regulator at least is very, very clear that either you are a bank, and by bank I mean a licensed player. You may bank, NBFC, payment aggregator, whatever, but you have been given a license. So either you are a bank or you are someone who's providing services to a bank. A standalone fintech will not exist, and I think the regulator is very clear about it in India. So if someone is looking to build any fintech at this point of time, this is the only two models they should look at. Either they can acquire a license and do that business, or they can provide services to a bank and get paid by the bank. I don't think a standalone fintech, and they've been enough now. I think that is no longer gray, and we used to always see in panels that's a gray. I think that's very black and white now, and I think no one should be taking chances with RBI coming so hard on some of these fintechs.
Fantastic. Ketan?
So, in my space, when we started, we were competing with the banks. In payments, when we started, there were banks who were acquiring merchants for payment services. We started competing with the banks. And till maybe last year, we were doing that. We were competing with the banks, and we are the largest non-bank acquirer in the country. But what we realized is, if this has to be a scalable model, you have to collaborate with the banks, right? And the banks also realize that they are great in customer acquisition, they are great in cross-sell, get the customer in and then sell multiple products, but they are not good in payment services. What we realized is we are very good in payment services, but to cross-sell might be very difficult. To acquire a customer is very, very expensive, right? Both sides realize that there is a game to be played together. It can be a win-win. And now we work with multiple banks. We continue to acquire on our own, but at the same time we work with multiple banks. So it can be where you start competing, you demonstrate your strength, understand your competitor's strength, and see if there is a way where you can use the strengths of each other and create the next practice, right? That's what we've done, and I think it's a win-win strategy.
Perfect. That's a very interesting question for you, Siddharth, personally.
I sit right at the center of this problem statement or this situation as such. So for people would know, but Freecharge was bought by Axis Bank in 2017. It's a 100% subsidiary, so I sit right at the center. I moved from the bank to Freecharge in that extent. The way I look at it, and once I've come into Freecharge, and it's been 4 years plus, almost 5 years now. What you realize is that from day one, it was very clear that the collaboration worked, it can work, and it is mutually beneficial. It was just a mindset problem. Now let's look at capabilities on both sides, or strong points. Fintech, speed, tech, product thinking, customer experience, bank, balance sheet management, risk management, compliance, regulation, processes. These were skills. What has happened over the last 24 months, if you see, with COVID and so on and so forth, banks have evolved their digital capabilities. They've evolved their digital stacks. Fintechs have got to now realize that compliance and regulation is an important aspect of doing business. You can't just sit on arbitrage or sit on the fence or do whatever you want. Complementary skills on both sides. Point of convergence is there. Both of them complement each other. The convergence is there. It is going to be a mutually beneficial relationship. Medium term, long term, all terms. That is what I have seen sitting at center of this.
Perfect. Abhishant?
Possibly मैं इसको इसको 3 हिस्सों में बांटूंगा. Till 2018, 2018 to 21, and now. So till 2018 it was तुम इस चिलमन से झांको, हम उस चिलमन से झांके, आग लगा दो इस चिलमन को, ना तुम झांको ना हम झांके. So that was till 2018. We are not interested. तुम अपना रास्ता देखो, हम अपना रास्ता देखें, हम देख लेंगे, मतलब ढूंढ लेंगे types. So that was 2018. 2018 to 21 was Amitabh Bachchan explaining to Mausi qualities of Dharmendra. सब कुछ ठीक है, but लड़का जो है वो जब ठेके पे जब जाता है तभी पीता है, और जब ये करता है तो वो करता है, एंड ऑल ऑफ दैट. तो मतलब आप जो है, आपके बीच में प्रेम है, लेकिन आप मौसी को नहीं दिखाना चाहते हो, तो आप उसको डीसेल कर रहे हो. 2021 के बाद का माहौल है जिसमें अमिताभ बच्चन, धर्मेंद्र, वो स्कूटर, वो बाइक और साथ में चल रहे हैं. सो ये दोस्ती हम नहीं छोड़ेंगे. तो ये जो रियलाइजेशन है फ्रॉम आग लगा दो चिलमन को टू ये दोस्ती हम नहीं छोड़ेंगे, इज द जर्नी दैट वी हैव टेकन एज अ कंट्री. So till 2018, it was essentially the piece wherein you are saying that I'll build something and I'll conquer the world and I compete with everyone in the market. Largely, it was driven by the fact that in global environments, there were islands of wealth which were created. You had an Alipay, you had Ant Financials, you had everything, WeChat and everyone who had created islands of wealth outside of the financial environment. At the same point of time, you had in Africa, M-Pesa and other pieces. At the same point of time, you had in US, independent entities which were billion-dollar entities. So therefore, when our entrepreneur was starting, was fundamentally of the view that I can question and challenge and compete and thrive in the ecosystem just the way it has happened in the global world. So therefore, that was the thought process till 2018 kind of a scene. Over the period of time, as the realization from the regulatory lens started coming in and it became clearer and clearer, it became a piece wherein you wanted to work together, but you were not comfortable with that value chain. And you slowly and steadily started discovering each other. It is only at this point of time in 2021 end or something, or as the regulator started bringing in disruption, the realization became clear that we'll have to work together and there is no other way out. One will bring what Siddharth already talked about. One will bring A part of the story. Other one will bring B part of the story. You combine the story and you make it a story wherein everyone wins. So that's the journey I think we have taken.
Perfect. I think if I were to summarize, I think the partnership between banks and fintech is going to benefit the end consumer. And that's where RBI as a progressive regulator, like you were alluding to, has made it mandatory that either you're a bank or a fintech. There's nothing in between. Yeah, you're a licensed entity or you're partnering with a bank, so that you still are under the ambit of the regulator. The regulator does what it needs to. You have to be in my ambit of regulation, and that's the way forward. Arpit made a very interesting point, which is the segue to my next question, right? Kaun sa wala gray is what he said, right? That's also a perennial challenge that we see in fintech world, right? The value proposition looks the same. But I leave it to Abhishant to throw numbers because he seems to be having stats at his fingertips. How many BNPL startups have mushroomed? But how many of them are going to be there, right? What is the uniqueness of the value proposition? कौन सा वाला grey, light grey, dark grey, कौन से segment को serve कर रहे हो? What's your go-to-market strategy? So what's your view in terms of all these who are latching on to this trend, raising money and getting on? What's the future?
See, I think what's going to happen is the ultimate truth is the customer is the king, right, or queen. And folks are able to now see through a lot of this hoopla very quickly, both on the consumer side, corporate side, partner bank side. So if you don't have a very clear differentiated value proposition and a real value that you're bringing to the end stakeholder, you're going to, raise maybe a couple of rounds or 3 rounds, and then after that you're going to just fizzle out. So I think that story has panned out time and time again. And to Abhishant's point, you're seeing now founders who are very sophisticated, who have spent decades in the ecosystem, really understand the nitty-gritties of things. They are the ones who are coming into the space and saying, look, I want to build something new, right? So that's a very good sign, because you're going to see better quality companies rather than Me Too. I won't specifically talk of BNPL because we've seen this हवा का रुख किस तरफ है, उस तरह से लोग हर बारी मुड़ते हैं. There used to be the wallet story, right?
Yep.
A couple of them made it big, Paytm, Freecharge, but a lot of the others just fell by the wayside. So we've seen this play out every 5 years, and the latest flavor of the season is BNPL.
Arpit?
I think one part is that there's a lot of information bias. I know it's a ET summit, but what happens is that most fintechs that you hear about will be the ones which are funded. So unless a fintech gets funded, you will never hear about them, right? So in classic cases, M2P, they were doing exactly what they're doing. They were doing so well, but you did not hear about them till they got a large funding round. And then what typically happens is that as soon as someone raises $100 million, there are 10 more companies who will say we can do this, and they'll raise another $10 million. So I think to a large extent, most companies which get funded within a period of time are similar. it doesn't mean that as a whole ecosystem, fintech is doing the same thing. You'll have great companies, and I think Abhishant will know a lot more about this because he does a fintech yatra where he goes across the country, and I'm sure he meets a lot of fintechs which are doing very innovative things but are not funded. And as an information bias, what we are consuming is only funded startups. So I think there has to be some amount of information which is available about companies which are not funded for us to even realize the amount of innovation that our tier 2, tier 3 towns are doing with the financial ecosystem.
Perfect. To be honest, I'll raise my hand up. I didn't know about Zaggle, Avinash, till I had to look it up. And I said, that's a very unique value proposition. It's not a Me Too at all. So,
Thank
and now
you.
you're saying it's profitable. So, bingo, there you go. So, Ketan, your take.
Here, I'll cut it into two parts. One is the size of the market. Like BNPL, new flavor of the month, year, I don't know whether the decade, right? Is there a market for 10 players to be there? If there is, then all 10 will survive. If there is no market for 10 players, then some will die, some will consolidate, right? Like, let's take payments for that matter, right? There are 16, 17 players. Now there are 5, 6. There have been a couple of mergers which have been announced. Couple more will be announced in the next 6 months. Is only because the market is limited. There are multiple players. And then people have realized that, okay, fine, I have, like I said, in banking and fintech partnership, the same is happening within companies, right? Somebody has a super acquisition strategy. Somebody has a super tech strategy, right? Can we come together, address the same market and reduce the overheads which are common, right? And create a profitable proposition. This is going to happen. This is happening. This is going to happen. But my gut is now, this is going to be led by the investor. Investor is looking at his portfolio and seeing which are the companies which are similar. We've invested, fine, we invested in 50 companies, but these 10 look very, very similar. Is there a way where, we can get all these guys to come and work together and, cut the common cost so that profitability comes fast? Because profitability is the new buzzword. Everybody is focusing on that. What was not there 6 months ago, now everybody is focusing only on profitability. So I think that's bound to happen.
Siddharth?
Yeah. So the way I look at it, I think the market is too big. There are going to be multiple players giving the same product, focused on certain market segments. So, and numbers, Abhishant is good, but I'll just throw some numbers. So let's look at household debt to GDP ratio. It's at 37%. If you look at developed economies, it crosses 70-75%. So which means you can double this. Currently, I think household debt to GDP is 35 trillion rupees. You can easily double it. Doubling it means look at the size. You look at mutual fund insurance penetration, it's less than 10%. You look at payments. I think payments is a big market. 200, 250 million, between that is the number of customers who are doing digital payments. We are a 1.3 billion population country, and a lot of young people are going to come into this ecosystem. So I think the market is big, and there will be multiple players who will survive in the market at different size and scale, depending on your aspiration and the target segment you're working on. BNPL, for example, I think there are like 20, 30, 40 companies doing BNPL. And a lot of them are surviving. None of them have gone down down. But yes, over a period of time, there will be casualties that you have to accept, and there will be consolidation that you can't avoid. Because as everybody said, funding as it moves forward will keep reducing logically. And everybody's made the point, Arpit made that point. It'll keep reducing. And lesser people will get funding. So as that happens, then you have to consolidate or there will be casualties. But the market, in my perspective, is big. Even we started BNPL last year as Freecharge. I think we were one of the last ones to start, if you look at it that way. But we are doing decently well. We do decent number of acquisitions. It's not as if that the demand has gone off. And we follow the standard rules because we are a part of the bank. You have CIBIL, you have all KYC, everything is there.
The 1 billion dividend or whatever they call it, right? The most used. The market is
No,
so huge.
I think the 1 billion obviously is an overhyped word, because if you go suddenly in tier 6, tier 7, digitization that way is not going to happen. That's why you have the BC network, which is helping that digitization. So the individual is not going to get digitized. The network will get digitized. But still, in my view, payments can go to 600 million. That's still double the market size.
True. Abhishant, over to you.
So I think when you are a startup, when you are building something, you start with the thought process कि द्वंद्व कब तक टाला जाए, युद्ध कब तक टाला जाए, द्वंद्व कब तक टाला जाए, तू भी है राणा का वंशक, फेंक जहां तक भाला जाए. So you try, and that's the reason why you are a startup founder, right? That's the reason why you start, why you build things. Otherwise, there is no point. There is no difference between somebody who is on the dope of monthly salary versus you. And if there is no difference, then where do you essentially start adding value? And that value proposition takes its own time. First, I heard of something called BNPL was when I got to know about Klarna in 2011. Incidentally had gone into that market, saw that, and I was surprised by what they had created. It's just that when you create such propositions and when you look at them purely from the point of view of digital acquisition engines, and you don't look at the prudency in terms of building the credit risk associated with that, you end up in a situation wherein Klarna is today, wherein the down round happened from where they were at 42 billion to a 6 billion, wherein they raised around 600 odd from Sequoia. Of course, we know what happened in FTX, so that's a different story in terms of how VCs evaluate putting 150 or 200 million dollars on table. So that's how essentially, if you look at the BNPL story started from there as such, from a public market point of view as such. But हमारी सबकी BNPL story तो उससे पहले से थी ना. जब हम 2 रुपए की चाय और 4 रुपए की सिगरेट पे बोलते थे कि लिख लेना, so that was खाते में लिख लेना, that was our BNPL story. And every single चाय सुट्टा वाला और दुकानदार would tell you a story कि somebody who did not pay him, but did he stopped essentially as a result of offering that product? No, he did not, because he knew the margin which is on offer essentially takes care of that. So as a result of that, from a BNPL point of view, where do we stand? We stand at a place wherein market doesn't at this point of time have got the right kind of penetration. Overall, at this point of time, and you can go to rbi.org.in, go to payment system indicators, and you will find the data, which essentially says that there are 2.18 crore UPI QR which is available from a merchant touchpoint point of view. At the same point of time, the acceptance terminal from a device point of view is another number. If you combine these two numbers, you reach a point of around approximately 2.5 से 3 crore के number पर आप पहुंचते हो from an acceptance point of view. Unique acceptance maybe will be in the range of 1.5 to 1.8 acceptance touchpoints, which are POS and all इनको मिला करके. Now think of the fact that all of this essentially somewhere represents a BNPL story, both from a merchant lens point of view as well as from a consumer lens point of view. It does represent, it's just that the first wave of providers which came, whether it was Neo Growth in 2014, 15, 16 period, or it was Flex Money, Yesdi and others who started and so on and so forth, that story essentially was not fully baked at that point of time, and therefore they had their own set of struggle. Now when you look at that story has expanded multiple times. So therefore, mota moti at this point of time, if you include legacy and new players, there are close to 40 odd players who are there in BNPL as a domain. MobiKwik अभी कुछ समय पहले मैं मिला था तो बासना बोल रही थी कुछ 1,000-1,500 crore कर रहा है, and there are multiple other people. So people, one, who are legacy are out there. Second, those who are new coming in are there. Within that, there is a bifurcation. Those who are fully digital only will do online, will essentially integrate with Razor, BillDesk, PayU, Infibeam, multiple others, and will go via that. And there are offline players who will go work with Mswipe, multiple other players offer that. Or there is a third category which is going out and acquiring merchant on its own and building a BNPL story out there. So these three stories separately getting created at this point of time. Enough and more market. अभी उसकी दुकान बंद होने में टाइम लगेगा, लेकिन जहां से शुरू हुई थी दुकान वहां बंद हो गई है, which is Australia and New Zealand. If you look at where from it all started, the entire BNPL story from a market point of view started from ANZ, which from there went and got listed in UK as a market, got screwed in Australia, and getting screwed in UK as well.
So I think that's a good segue, given that you did allude to so many payment firms, Abhishant. That's a good segue to the next question that I had, there's been a lot of talk, right? In the last couple months, we've seen a lot of press and the government push on open network for digital commerce, right? And in terms of, there are this multiple plethora payment companies, there are banks, traditional banks who are also focusing in the payment space. So where do you see, starting with you, I want a perspective of where do you see, given the emergence of open network for digital commerce and given the need to focus on small merchants and enable them so that the kiranas get e-enabled and they're able to sell their goods, right? The entire India is going to soon become a networked supply chain ecosystem. It's what is the end goal? So there are two questions that I would want your perspective on in terms of where do you see the existing payment provider, payment processors playing a role, payment companies playing a role, and do we see any new fintechs emerging out of this which will address that segment?
So पहले तो मेरे ख्याल से शायद आई थिंक ये ज़रूरी है एंड आई एम श्योर ऑडियंस विल हैव अ व्यू कि ONDC क्या है. सो अगर आप लोगों ने एक हिंदी का कुछ शब्द सुने हैं भानुमति का पिटारा, सो एट दिस पॉइंट ऑफ टाइम ONDC इज भानुमति का पिटारा, wherein you have eclectic mix, as Shankar said earlier, you have a very eclectic mix which has come together, and is potentially it could be that point in 2014, 15 or 16 when finally UPI came into existence and changed everything. So is that moment from a commerce point of view? We don't know at this point of time, but there is a lot of buzz and excitement. The good part is this कि शर्मा जी का लड़का जो 2016 में पीछे छूट गया था और अभी भी क्लास में वो पीछे सबसे पीछे बैठता है, उसको इस बार समझ में आ गया था कि बॉस लास्ट टाइम में जब छूटी थी मेरी बस तब से मैं क्लास में सबसे पीछे बैठता हूँ. तो आजकल शर्मा जी का लड़का सबसे पहला उसने कहा बस ये कर रहे हो तो सबसे पहले मैं आता हूं. So which means what will happen is that those who were potentially not early adopters and missed the wave in last occasion will become one of the first and early adopters of what is going to happen. But उससे पहले ONDC fundamentally है क्या? ONDC fundamentally ये है कि boss there is a buyer side environment and there is a seller side environment. Buyer side, seller side environment are available in a buyer side ecosystem wherein I can go, if I'm out here today at this point of time, I can possibly go into Paytm, can ask for a movement of mine from this place in BKC to Powai where I live, and I potentially have the possibility of looking Uber 240 रुपए, Ola 235 रुपए, Rapido 82 रुपए, Auto Phalana, and so on and so forth. So that's what essentially it enables. So what it is doing is that it is one side, it is bringing new set of commerce inside a Paytm environment which never existed. So it is opening the possibility of that new commerce to them. At the same point of time, for those who are on the aggregator side, on the other side, who are on the seller side of that ecosystem, are getting possibility of being seen in large distributions where they never existed. So therefore, it's an interoperable network which will allow existence of large buy side, sell side environments to coexist with each other. That's what essentially it's going to do. Therefore, as a result of what does that mean and what it represents from an opportunity lens point of view was the question. What it represents from an opportunity point of view, think of the fact that if so much of data and so much of commerce around it is going to happen, that means you need somebody who is going to create a data layer on top of this and will make commerce contextual. And therefore, you will have new set of data startups which will come into picture. The second piece which potentially will happen is this, that because out here, there is a sachetization from a payments point of view which is happening. At the same point of time, because there is commerce involved, you will have sachetization from the point of view of credit as well, which will mean UPI credit from a story point of view will start finding further acceptance in this value chain. Third, it essentially means that you will enable the smaller merchant who is coming via small ecosystems. Bangalore में एक startup है जिसके पास में 6000 और retail outlets हैं. You're giving them a possibility of bringing them into a Paytm buyer environment wherein they can then essentially be accessed by consumers at the next door neighborhood touchpoint point of view, which means you are enabling commerce from an online value chain point of view wherein delivery is maybe by a Dunzo, supplier is that startup, and here you are buyer from a Paytm point of view. In this As a result of all of this, you are essentially enabling further digitization and digital adoption of that commerce from a merchant lens point of view, which will mean it will potentially trigger some layers of cash flow based lending from a merchant lens point of view. So all of this combined will represent opportunity from a data lens point of view, new set of data startups, which will combine this data with other data points, new set of new set of credit startups, and new set of possibly commerce enablers, which will come into picture.
Perfect. Siddharth, your views on?
So the way I look at ONDC, so there are two big parts to it. So the one question you asked is there going to be innovation in payment? As of today, I don't see any innovation because what ONDC is built is for commerce. They're trying to build an interoperable platform for commerce, and payments will work as they are. I think the bigger challenge that I see in ONDC, and in my perspective, and I might be completely wrong on this, is ONDC requires the seller to digitize his ecosystem, complete ecosystem. And ONDC is focused on the small retail. It's not focused on organized retail. Organized retail is doing some of its stuff. Is small retail. That is the small retailer interested in digitizing his ecosystem, inventory management, billing, everything. And we all know the challenge around it is taxation. That's the biggest challenge. Is the biggest challenge I see, because unless that gets solved, you will never get ONDC at scale. You will never have buyers, or you will not be able to give buyers choice because of this issue. So I think it's still, in my view, a few years away. As Abhishant said, it will need a UPI moment, but that's going to be a large UPI moment because here it's about convincing that seller, saying that you need to digitize yourself. That's the way I look at it.
Perfect. The entire supply chain.
I'm saying the retailer. The supply chain can get digitized. It's not that difficult. It's the retailer. Because today, in my view, that's the biggest challenge segment. And because the focus is also not your Levi's store guy, the focus is the Kirana, the Pant shop, that segment.
Perfect. Ketan?
So, yeah, Abhishant is right. Too early. This can be the UPI movement. But from a Mswipe point of view, outstanding opportunity for us to, this will also, help tier 3, 4, 5, 6 get digitized, right? And merchant acquisition will be easy. And like Abhishant said, easy to lend to these guys too, because there'll be a lot of alternate data available. So too early, but from an opportunity point of view, I think Sharmaji's son is going to be ahead of the queue this time.
Sharma ji ka beta is an example in itself. With this, I'll come to the last question, and I'm going to ask you, Avinash and Arpit, for this session. We spoke a lot about the funding winter. We spoke a lot about this. In terms of how do we see the funding landscape overall evolve, right, in future? The winter is here, summer is going to follow the winter. So what's your view in terms of good ideas will still get picked up? What's the business? Are VCs going to be more diligent than they are today in terms of putting their money where their mouth is? So what do you think based on your interactions?
So I'll make a few predictions, right? So you're going to see three things happen. One, you're going to see consolidation, right? Secondly, you're going to see a lot of good companies go IPO sooner or later, because there's a realization that, look, there's, in spite of all the challenges that you might say of being listed, there's a lot of benefit as well, a lot of freedom as well. Right? And the third thing which definitely is going to happen is, after this experience, I don't know about VCs or Ps, but there is a general sense that's going to emerge that I need to go after value, not valuation. Right? And that's going to, in my view, be ubiquitous. You're going to see that both with founders, both with investors, angels, across board. Am I saying that there wouldn't be irrational exuberance ever again? No. But for the next maybe 3 to 4 years, this winter is going to serve as a good reminder.
Perfect. I'm going to pick that phrase, courtesy Abhishant, irrational exuberance. That's something that I'm going to add to my dictionary. Go ahead, Arpit.
Yeah, I think one thing is very certain that companies are going to get funded, because like a country like India, we're growing at 6% and above in terms of GDP, which means that there's going to be growth capital available. There is going to be money which will be made. Of course, there are going to be companies which are going to go bust, but there will be some companies which will also going to give great exits to their investors, and that will fuel the next level of growth. What I think, why I think we are calling it funding winter, to be very honest, is because of whatever has happened in the last 1.5 years span post-COVID, when you had so much money which people saved by not going to office or not setting up offices, right? So there was so much of capital that was saved that people just thought that, okay, now I'm saving so many $1 million which I didn't have, so let me just throw it away. So I think that's kind of what happened, right? But I think once all that has settled down, I don't think this is going to be any different from what it was pre-COVID. Yes, there is a lot of hand burnt, and you will keep seeing that news continuously, and that will deter some of these investors. But I don't think fundamentally anything has changed in India. Fundamentally, we are doing much better than we were 2 years ago. One part which was always slightly negative was that our regulator was not very clear, which has changed. Regulator has now given extreme clarity on almost every fintech debate, which means that you can put your money at a place and know that this will remain for a short period of time. I'm not speaking for RBI. They can do what they want, but at least there is more clarity than there was earlier. And I think our current demographic supports digitization. If we are not like a Europe where we have an aging population, our current demographic is such that they will actually adopt more fintech products. So if you look at fundamentals, I think there is nothing wrong in India. We are much better than we were. We have survived COVID. We are only one of the only countries which has no lockdowns and has removed every single COVID barrier. So I don't think there's anything wrong with our fundamentals, and we should just, and my actually request to everyone who's part of the ecosystem is we should talk about more positive news than negative news, because I think right now it's more about perception which has been created, and some to do with the layoffs which is happening in US, which is again nothing to do with India. Indian companies haven't, I mean, other than some of the companies like EdTechs, where the core value proposition did not exist our COVID, which is different, but companies which value proposition still exists are not doing layoffs. There are not so massive layoffs in India. So overall, we should all have positive sentiments. India is doing extremely well. And if the company has core good fundamentals, funding should not be a problem.
Perfect. I don't know how to summarize now, Arpit. You've done such a phenomenal job in bringing everything together. So, and in the interest of time, I think it's all good, is what we say. With the fintech, there's no funding winter. When summer follows winter, the focus on unit economics is absolutely important, and it has come back for all the right reasons. And there is money available for a good idea. Would that be a fair summary? And banks and fintechs are here to co-opt and compete. And the winner takes all, right? Thank you, Abhishant. Thank you, Siddharth. Thank you, Ketan. Thanks, Arpit. And thank you, Avinash. I hope you guys enjoyed the interaction as much as I did learning from each one of them. Thank you.
Thank you.